The AI demand signal is broken, and only one company is acting like it.
I kind of get the impression that, some of the other companies have not written down the spreadsheet, that they don't really understand the risks they're taking. They're just kind of doing stuff because it sounds cool.
That's the CEO of Anthropic on the Dwarkesh podcast, talking about the biggest spending cycle in tech history. His company, it's the only major AI lab pricing for what demand actually looks like. So what's happening? Every time you use AI, it costs tokens. They're the basic unit of AI consumption. Every question that you ask, every answer it gives back, every line of code it writes. A simple chat, it costs a few hundred. But the new generation of AI agents, the ones that can browse the web, write code, complete tasks on their own, they can run for hours in the background, burning through millions of tokens without you even watching. It's the difference between ordering a car and sending that car out to run errands all day on your credit card. And right now, no one knows how to budget for it. Uber CTO told The Information this week that AI coding tools have already maxed out the company's full year AI budget. And it's only April. Goldman Sachs research says companies are overrunning their initial inference budgets by orders of magnitudes, with AI costs on track to rival engineering headcount this year. Then there's the tokenmaxxing problem. Companies like Meta and Shopify, they're putting employees on leaderboards, not for productivity, but for how much AI they use as a sign of adoption. Here's Nvidia CEO Jensen Huang.
If that $500,000 engineer did not consume at least $250,000 worth of tokens, I am going to be deeply alarmed.
But when you track usage instead of output, people game it.
If your goal is to just burn a lot of money, there are plenty of easy ways to do that.
That's the CEO of Databricks, which processes AI workloads for thousands of companies. He's seeing it firsthand. Eric Glyman, CEO of Ramp, which tracks AI spend for thousands of businesses, he says it comes down to efficiency.
You can use the most advanced model on the planet to edit your email, but maybe you don't need to.
On top of that, there's the unlimited usage problem. Consumers have been on flat rate plans. ChatGPT Pro offers unlimited messaging for a fixed monthly fee. But Anthropic, started to see how unsustainable that model is, especially as we move from chatbots to agents. Agents burn through tokens way faster. Anthropic cut off popular third-party tools like OpenClaw from using unlimited subscriptions. One estimate suggested a single $200 max plan could be burning $2,000 to $5,000 in compute. And it's moving enterprise customers off flat rate seats to per token billing. If a new price tag is now attached to every token, consumers and companies that budgeted for a flat number, they could start pulling back. And that's the problem. Token demand is what the entire AI investment cycle is built on. It's how Nvidia justifies selling hundreds of billions of dollars in chips. It's how data center companies justify building 30 gigawatts of capacity. It's how the biggest names in tech justify pouring billions of dollars into infrastructure. The assumption is that all this usage keeps growing. But if a meaningful chunk of it is employees gaming leaderboards, agents running in loops, or companies just blowing through budgets they can't sustain, then the infrastructure being built to serve that demand, it may be sized for a number that isn't real.
There is zero doubt that there's overinvestment.
Emma Day calls this the cone of uncertainty. Data centers take 1 to 2 years to build. Every AI company is making billion-dollar bets right now on demand that hasn't materialized yet. Buy too little, you lose customers. Buy too much, and the revenue just doesn't show up. The math stops working. Anthropic is the first major lab to respond, killing flat rate plans, billing every token, building for demand that it can verify.
If you're off by a couple years, that can be ruinous.
Both companies are expected to IPO this year. Anthropic shows up with clean per token data. They know what customers are paying for and why. The market is already sorting this out.
Setting aggressive goals, but understanding what will the return on investment be, and under-promising and over-delivering is often the more prudent and long-term strategies.
The company that priced for real demand, it's going to look very different from the one that didn't.